What's going on, guys? Welcome back to another one of my market analysis video. Now today in this video we'll be focusing on market psychology and the mindset that you need to have whenever you're doing your multi-time frame analysis. So without any further ado, let's get started. When it comes to chart analysis, what is market psychology? When it comes to chart analysis, market psychology refers to the mindset you need to have whenever analyzing charts across multiple time frames. This mindset can be called situational analysis. Situational analysis refers to always being aware of the overall condition of the market instead of focusing on isolated price action. So instead of reacting to every pullback or every candlestick pattern, you step back and you ask yourself, what is the market currently doing? What phase of price action are we in? And which direction makes the most sense based on the overall trend or based on the bigger picture. If you don't anchor your analysis to a higher time frame, then you can easily become distracted by price action in lower time frames that contradicts the dominant trend or the higher time frame. Because as you may already noticed, it's completely normal to see an uptrend on the daily chart, but a downtrend on the 1 hour time frame. This doesn't mean the market is confused. It just means that the market is moving in different phases across different time frames. By respecting a dominant trend or by respecting a higher time frame, you maintain clarity, consistency, and discipline in your trading. 3 things a successful trader must have. So keeping what I said in mind in the first part of this video, we want to start off by identifying which time frame we want to use to get the overall trend for price action. Personally, for me, I am a swing trader, so I focus more on the higher time frames for trend direction. Now in this case, I'm following the weekly time frame for trend direction. And as we can see, the trend that price action is currently in is that it's consolidating. So there is not much price action to analyze, because at the moment we have our swing high, we have our swing low, and price is trading in between that. So what I would advise you to do is make a note of what each time frame is doing, just so that you stay up to date with the current situation of the market. We can say that the weekly time frame is in a zone of consolidation. So now we're going to move down lower to the daily chart. And the daily chart, we are using this chart for market structure. So seeing that on the weekly time frame, we're consolidating, on the daily time frame, we should see a clear zone of resistance and a clear zone of support, because whatever trend we have on the time frame that we choose for price trend, we should see the market structure for that particular trend on the lower time frame or on the next time frame below. Here we can see a clear area of resistance, and we can also see a clear area of support down here. So we have the market structure down. The weekly time frame price is consolidating, and on the daily time frame, we can say that price is respecting those zones of support and resistance. And as it relates to most recent price action, price rejected resistance and is now moving lower towards support. Okay, so now we have current price action on the daily time frame. We're consolidating on the weekly, and on the daily, we just rejected resistance. So now we're moving towards support. So keeping the situation in mind, that means that on the 4-hour time frame, we should be seeing a downtrend. So as you can see clear as day,
We are experiencing that downtrend. This is good. So we're gonna add that to our notes. Okay, so we're gonna pause here and then we're gonna go over the current situation. On the weekly time frame, we have price consolidating. On the daily time frame, we see the market structure for that zone of consolidation. And as it relates to more recent price action on the daily time frame, price rejected resistance, or price was resisted. So this zone was respected, and now we're targeting this level of support down here. And on the 4-hour time frame, we have a downtrend. So as you can see, the lower we go down on the time frame, the more closer we get to more recent price action. So if this downtrend should continue, then price is targeting this level of support down here. Okay, as it relates to the most recent price action for this downtrend, you can see that price formed this low right here and then it put in this high. Then the next thing that price did was it closed below this low and it formed a new low. So this is now the lower low. After price formed this lower low, it pushed up and it formed this lower high. Then after it formed this lower high, what it did next was it closed below the most recent low. And now we're expecting for price to put in a new low so that it can go up to form a lower high to continue the downtrend. So now we know that price recently broke this level of support or this low. Then we know that it's probably too late for us to go in a sell trade. And the reason for that is because at the current phase that we're at in price action, we already break this low. So price might not go any lower. And if it does go lower, it's not going to be a very far distance. So now what we're expecting is that price action is going to go up to form a lower high. Then we can get a sell entry in. So what we want to see is price push up towards this level of resistance, the trend line, and then respects it. We need to see candlestick pattern confirming that price is rejecting this zone right here or rejecting the trend line. Okay, so now we have price at our trend line. We have two candlestick patterns showing you price hesitation, but that by itself is not enough for you to enter. You would need something like this, where we have a very strong push away from the level of resistance. We need to see price move away from that zone with momentum. Until we get a bearish engulfing candlestick like this, it wouldn't be wise to go taking a short position in this market. Now this downtrend have a problem. We are no longer forming lower highs. The moment that price pushes up above this most recent lower high and closes above it means that the downtrend is over. Because let me show you. So according to Google, a downtrend in Forex is a sustained overall decline in a currency pair's price. It is characterized by a chart pattern of consecutive lower highs and lower lows. So if at any point the candlestick pattern is not showing you lower highs, lower low, then it is not a downtrend. So what we should be looking for next on the 4-hour chart is for price action to give you a pullback to form a higher low. And if we're going to get a pullback on the 4-hour chart, we're also going to get a pullback on the 1-hour chart, and we're going to get a downtrend on the 15-minute time frame. So now we can go to lower time frames like the 1 hour and the 15-minute time frame. to get faster information about what the market is doing. All right, so this is the 1 hour chart. As you can see, we're already too high to be taking buy trades. So we need to wait on that pullback. This seems like a pretty decent pullback. It is somewhat aligned with our area of what was once resistance over here. It's the level that we broke most recently, the most recent lower high that we broke. This level was once resistance, and what was once resistance, normally price turns that into support. So we should be expecting price to respect this level. It might not respect it. It can keep on going lower, but we're expecting price to respect it. So we're not going to enter into buy trades yet until we see that this level is being respected. So let's go down to the 15-minute time frame to see what's happening. All right, so on the 15-minute time frame, we can see that price is in a downtrend. You have lower highs and lower lows. This was the most recent high, and this is the most recent low. So we want to mark out those levels. And the only thing we're doing on the 15-minute time frame is we're waiting for levels of resistance to be broken. So let's see. All right, so this is now your new lower high. So now we're not watching this level, we're watching this one, because this is the most recent lower high, and we want to stay as close to price action as possible. This is what we're looking for. This high was broken recently, which means this downtrend is no more. We had a lower high, we had a lower low and a lower low. Then we have a relatively equal high and then a higher high, which means that on the 15-minute time frame, the downtrend is over. Price is now starting to form higher highs and higher lows. We have this low right here and we have this higher low right here. So now we want to get our entry in on a pullback on the 15-minute time frame. And keeping our notes in mind, we already know what we're looking for. We know that the downtrend is over on the 4-hour time frame, and we know that we were looking for a pullback or a higher low on the 4-hour time frame. On the 1-hour time frame, we got the pullback, and then on the 15-minute time frame, we're starting to see higher highs. So let's look at what we're seeing on the 4-hour time frame. So now if we look at the candlestick patterns individually, you can see that for the last 8 hours, the bears were in control and the market was selling off, or we were getting that pullback. And then this candlestick right here, within this 4 hour, the bulls take over. So now we just want to see how this one closes. And we also got the pullback on the 1-hour time frame. This right here is a bullish engulfing candlestick pattern. This is telling you that the bulls are taking over. So we're getting more buyers in the market than sellers. Okay, so this is a 15-minute time frame, and like I said, we got the higher high. Now we were looking for the higher low. So this is the most recent low right here. So that means we need to see price finding support anywhere above this level. So what price did was price came down here and it respected this level of support. We got a lower time frame. This is like a 1-minute time frame area of consolidation right here. But I took my entry off of this bullish engulfing candlestick pattern right here. And I put my stop below the most recent low, because I know if price should go below here, then the pullback will continue, and I want to be out of the trade if that happens. I could have even put my stop below this area right here. It depends on how much I risk. As you can see, we are now in a decent uptrend on the 15-minute time frame. And on the 1-hour time frame, we are also pushing up to target this level up here. So now We farmed our level of support, and now we're going to target resistance. So this is what my psychology was like before I took this entry. I already knew that the weekly and the daily time frame is consolidating. And I know that price just rejected the level of resistance and it was now seeking support. I already know that. So when I went down to the 4-hour time frame, I saw that we had a downtrend. So I could either trade along with that downtrend or wait for price to get to my level of support for me to look to take an entry. So that's what I was expecting. I was expecting price to go here. So if you look at what happened here on the 4-hour time frame, the downtrend was broken. So I had to reevaluate my plans for taking an entry. So now I was no longer looking for price to come down here because I know we were no longer in a downtrend. What I was looking for now is for price to give me a pullback so that I can get in on this new trend that we're forming, which is an uptrend. Because the moment price stops giving you lower highs and lower lows, then you can either expect for price to consolidate or turn into an uptrend. So when I went down to the 15-minute time frame, I was only looking for one thing. I already know that we were getting the pullback. So I was only looking for price to start giving me higher highs and higher lows. This way I know that buyers are starting to step in. So no, all I had to do was wait. This was actually Friday's price action. Well, I'm actually making this video today on Friday, January the 23rd. So we got price push above our first target, farm the higher low, and then continue pushing to the upside. If it doesn't look like a higher low on the 4-hour time frame, this is what it looks like on the 1-hour time frame. So I was only in this trade for like 2 days. Yeah, I got my entry in this daily candlestick right here, and then 1 day later, my take profit got hit. I was only in this trade for 2 days. The purpose of this video, like I said, is just to show you or give you an example of what your mindset should be like when you're analyzing the chart. How to keep the bigger picture in mind.
If you were to take anything away from this video, I'd want you to remember that you should always know what type of trader you are, whether you're a swing trader, day trader, or a scalper. If you already have that figured out, then it would be easier for you to do the next thing, which would be for you to know which one of the higher time frames you would want to follow for your dominant trend. The moment you got that one figured out, then the rest of the trading strategy would be easy. Also, always keep a mental note of what most recent or the current price action is doing across all time frames. But if you can't keep a mental note, you can always just write it down. And the last thing would be for you to always take a step back and look at the bigger picture. Don't do all of your chart analysis on the lower time frame. So if this video was helpful to you in any way, please like, comment, and subscribe, and I'll see you in the next one. So until then, peace out and God bless.